Hello and welcome to our small and mid-cap buy, hold, sell. My name is Camilla Cox. I'm from the Corporate Affairs team here at Wilson Asset Management, and I'm joined today by Will Thompson, Shaun Weick, and Sam Koch. Sam, we'll start with you. MyState, can this Tasmanian-based bank outperform the majors?
In our view, it can. MyState's a buy from our perspective. The fact that they're based in Tasmania is actually their competitive advantage. They've got the ability to grow strongly across the east coast of Australia. They also have a sticky deposit customer base, based and very loyal, based in Tasmania as well. So we see their ability to grow their loan book, expand net interest margins across a fixed cost base. That will drive earnings growth over the next few years. Buy.
Will, you caught up with these guys recently at Diggers and Dealers. Centaurus Metals, buy, hold or sell?
Centaurus to buy, yeah, we caught up with Duncan and Roger. It's a really good company. We really like it. We think the ability to grow the resource, which we should see a resource update at the end of this month, which will then lead to sort of financing discussions, debt. They're going to update the DFS. We think on a valuation perspective, it's still cheap. And we think they've got some interesting relationships with Vale. They've got an offtake that's sort of still able to for negotiation. So at this stage, yeah, it's definitely still a buy.
Shaun, over to you. Redbubble, buy, hold or sell?
Redbubble's in the too hard basket. It's a sell for us. The key issues that we saw coming out of the result was really around the incremental $30 million of investment that's going into the cost base. We think they've underinvested through COVID, and as a result of that, we just find it hard to see any earnings visibility here. So yeah, it's a sell for us.
And what about Lovisa? Since the recent result, the share price has been sparkling.
Yeah, Lovisa's a hold for us, and it's purely on share price performance. It was what I think probably the best result of reporting season. We do think the market's underestimating the extent of the store right opportunity from here and the operating leverage that will come in following years, but we think at these levels it's a hold.
Sam, Ridley, tell us what you think.
Yeah, Ridley's a hold for us. Ever since they changed their management team in 2019, that was the catalyst to really transform the business into a higher returning, a lower debt business. From our perspective, given the share price appreciation where it's trading relative to its historical valuation, it's a hold, but we're really backing management to deploy excess capital in an accretive manner.
Gold stocks have been ignored by investors recently. Emerald Resources, buy, hold or sell?
Yeah, gold stocks has been a tough environment. We really like Emerald Resources, and it's a buy. They've able to keep their costs down, still producing at under $1,000 an ounce. And they've also got a new asset which they purchased called Bullseye, which we think is really interesting, and we're looking forward to seeing those drill results. While they're also looking at developing a second mine in Cambodia, where their first one's located, Octavale. So we think there's some good valuation upside there to buy.
Shaun, more and more people are returning to the office, which means the kids are back at daycare. Evolve Education, what are your thoughts?
Evolve's a standout buy here for us. They've just divested the New Zealand assets for about $50 million. You're essentially left with an Australian trading business which is performing well and currently valued on about 2 to 2.5 times EV to EBITDA versus peers on over 5 times. The balance sheet therefore provides significant flexibility around capital returns. We think a buybacks are possible and then acquisitions over time. So yeah, it's a strong buy for us.
And Will, Pact Group Holdings?
Been tough for Pact. They've had sort of everything thrown at them in the last year with supply chains, rising oil prices, which are impacting resin and their packaging costs. Look, it's a hold for the moment. I think they're doing some interesting things. They've still got to sort out a couple of issues, but it's definitely one looking at, however, hold for the moment.
Sam, over to you. Are you worried about the housing market crash? What are your thoughts on Reece?
Great question. So Reece is really one of those high quality businesses that a lot of fund managers really want to own. From our perspective, the concerns around the housing market has really seen the valuation of this company drop to levels that are quite attractive from our perspective. If you look at their strong execution in Australia, we're really backing management to be able to replicate that success into the US. And in our view, their current sort of 200 store network size could be multiples of where it currently is at the moment. So Reece is a strong buy for us.
And while we're with you, Probiotec, buy, hold or sell?
Probiotec is a buy from our perspective. We believe that the stock offers investors valuation and earnings upside. The company manufactures and develops and packages products on behalf of pharmaceutical companies globally. And really what the market's missing here is their ability to compound earnings growth at a very high rate relative to its current valuation. That's driven by strong organic growth and supplemented through bolt-on M&A. Trading at 10 times PE with over 15% EPS growth projected, we believe that this company can re-rate over the next few years. Buy.
Shaun, IDP Education, what are your thoughts?
Yeah, IDP is a buy for us. We think there's non-fundamental factors weighing on the share price at the moment with the release of escrow arrangements and also the departure of well-regarded CEO Andrew Barkla. But if you look at policy settings globally from here, they're the most supporting they've ever been in terms of, migration for students into IDP's key destination markets. You couple that with the investment they've made in their digital strategy, we think they're well placed to take significant market share and generate very strong earnings growth over the next few years. So it's a buy for us.
Will, it's been a tough year for tech stocks. Tell us about ELMO Software.
Yeah, ELMO's a buy. It was a really interesting result. I was surprised by the result as well. They're sort of proving that they are able to increase that ARR over the past year. And I think that we could see sort of now the operational leverage come into the business. With costs sort of at a level now where they don't need to increase, probably means they don't need to raise money anymore. So it's starting to look like a much higher quality business than we previously thought. So that's a buy.
Sam, Cogstate are the only healthcare company trading at a reasonable multiple. Buy, hold or sell?
Cogstate's a buy from our perspective. Large pharmaceutical companies rely on their technology to really undertake their clinical trials in the Alzheimer's disease space. What we're really attracted to in Cogstate is that they were one of the first companies to provide the software first technology, which has accelerated the industry's push towards decentralized clinical trials. This has been validated by the fact that one of their largest customers has actually taken a 7% stake in their business. The company's trading at a below 1 times price to earnings growth multiple with over 15% of the market cap caught up in cash. We believe that acquisitions and earnings upgrades will drive the stock from here. It's a buy.
Shaun, mining services have been performing pretty well lately. NRW, is it a buy, hold or a sell for you?
Mining services is back. NRW is a buy for us. The FY22 result came in slightly ahead of expectations and really reflects, the worst of the COVID impacts being behind these companies. The outlook for commodities demand remains strong in our view, and order books are full, which provides good visibility, and we see upside to the FY23 earnings guidance. The balance sheet's net cash and valuations are screening compelling. We think it's a buy.
Sam, People In, buy, hold or sell?
People In's a buy for us. This is a workforce solution business that's trading at a reasonable multiple. People In have been growing organically at about a 10% clip, and they supplement their organic growth through acquisitions as well. We believe that they've been really hampered over the last couple of years. Borders have been closed and they haven't been able to have access to some of the migrant workforce that would otherwise be in the country. As borders reopen, we should see organic earnings growth accelerate from here. And you're trading at a sub 10 times price to earnings multiple with strong earnings growth and an undergeared balance sheet. We believe that there's plenty of catalysts to see this company re-rate.
Will, lithium stocks have been having a stellar run. Liontown Resources, buy, hold or sell?
Liontown's a hold. Don't want to bet against any of the lithium companies at the moment, but I just prefer to own a producer rather than a developer. I actually went out and saw the mine site when I was at Diggers and Dealers, and look, it's an impressive operation. Management are really impressive. However, just at the moment, I'd rather be exposed to the producers. It's a hold.
Centurial Industrial, trading at a discount to NTA. What's not to like, Sam?
Yeah, Centurial Industrial REIT from our perspective is a sell. I agree with you. There's an attractive entry point here at a discount to NTA, and we believe that the management team are executing as well as possible. However, rising interest rates are a headwind for valuations, for their earnings from a debt perspective as well. And we really see that it's hard to outperform from that perspective. Sell.
Shaun, IPH.
IPH is a hold, but leaning towards definitely a buy on any pullback. The result came in ahead of market expectations and earnings quality is improving. However, the key catalyst for this stock is really around the acquisition of Smart & Bigger in Canada. We see the opportunity for the business to essentially replicate what they commenced in Australia 5 to 6 years ago and undertake acquisitions and really consolidate that market. So yeah, we think it's a hold here, but definitely leaning towards buy.
Now, Sam, McMillan Shakespeare recently changed their CEO. Does that make them a buy, hold, or a sell?
McMillan's a hold from our perspective. We've met the recent management team and we really believe they have the capability to drive a more streamlined business and divest of non-core assets and non-core investments. It really follows a history of poor capital allocation from the perspective of the last management team. And we believe that this new management team really has the ability to improve shareholder returns. But after the recent share price run and trading, on par with its listed peer Smart Group, we think it's a hold.
Will, Hansen Technologies, buy, hold, or sell?
Hansen's a buy. It's got one of the best management teams, high quality. They've been there for 30 years. Balance sheet's really strong. Reported good earnings. It's been a bit of a frustrating period. Sort of, they're looking to do a bit of M&A, and just the vendors. The valuations are still probably at the end of 2020 and 21 levels where they were, eye-wateringly high. But we're starting to see them come back, and so hopefully they'll be able to make a few transactions, or hopefully do a few transactions in the second half of the year and into 2023. And so, we think it's a buy.
And Shaun, what about email payments?
Yeah, email payments is a sell for us. We think there's just too much regulatory uncertainty with this business, and the result just past raised some red flags around, cash flow generation and what's sort of happening behind the scenes there. So that one's a sell for us.
That's all we have time for today. Thanks, Will, Shaun, and Sam.